Hello guys and welcome to My Way to Fire. Another video from this series where I explain different terms and abbreviations commonly used in finance. In the last video I talked about the PEG ratio, what it is, how it works, how to calculate it and how to use it. This time we will take a look at the price to sales ratio. So what is the price to sales ratio? The name is somewhat self-explanatory. The price to sales ratio is a valuation metric that tells us how many dollars we have to pay for each dollar of the company's revenue. Simple enough. Let's take a look at the calculation then. First we have to take the market capitalization of a given company and then divide it by its revenue. It is usually done using the revenue for the trailing 12 months. For a better understanding I will calculate it using real numbers. I will for example choose Verizon stock for this demonstration. Its market cap is $223.62 billion as of now. The revenue for the trailing 12 months is $133.61 billion. We have all the numbers we need and all that's left is to divide them. That gives us the PS ratio of 1.67. I think this is pretty clear. So what is the price to sales ratio good for? As I said earlier, it is another valuation metric you can use when searching for a good stock to buy. But it can be especially useful if you want to compare companies that don't make any profit yet. Since the EPS for such companies would be negative, you can't take a look at their PE ratios. To make it clear, a lot of companies don't make profit in their first years, so they can't be valued as easily. As it is with many of the valuation metrics, be careful what companies you compare. Always try to compare similar companies from the same industry, otherwise you could get misleading results. Every industry has a different average price to sales ratio. Another thing to watch out for is that it doesn't take into account any debt a company might have, which can also mislead you. It is a useful metric, but always make a deeper research before buying any stocks. So what is a good price to sales ratio? The lower the better, since we want the revenue to be as high as possible. Of course, higher PS ratio doesn't have to mean the stock isn't worth buying, since it can go down a lot just after another quarter's earnings if the revenue grows a lot, which isn't uncommon for new companies. Guys, if you enjoyed this video and found it helpful, please hit the like button to support this channel, and if you are interested in more videos about investing, personal finance and just overall money related topics, then make sure you subscribe. As always, thank you so much for watching and I hope to see you in the next video.